All right, all right, all right. We are live Monday, mortgage broker Q&A, whatever the heck I'm calling this thing. Every single week when I do that little 30-second intro, I tell myself that I'm going to figure out how some of these guys on YouTube, and if anybody knows how they're doing it, please let me know. They've got like a 10-minute or a 15-minute intro where what I think they do is they might go live and then post that 10 or 15-minute thing on there. And I think what it does is it gets the YouTube algorithm kind of working. It gets more people notified. Hey, this guy's live. Hey, this guy's live. So then right when we jump on, we've got more people on there. Looks like we've already got 6 people joined. It always takes a little bit of time to get people notified, joined in the comments and whatnot, and get rolling. So the sooner we can get people going, the better. And I think that's the trick. I think that might be, I keep learning different hacks and tricks for YouTube. I think one of them is having a countdown at the beginning where it actually goes live per YouTube's like live, but then it's got the countdown. So people see, oh, it's going to be live in 10 minutes. Oh, it's going to be live whenever that is. So, all right, we got a couple people in there. Kevin Hawthorne, good to see you, my man. If anybody doesn't know about Kevin Hawthorne, look up. Pretty sure he's got a YouTube channel, and he sent me some stuff. He's been volunteering in Florida for going on like 15 years. Correct me if I'm wrong, man, but he's volunteering, helping people find their way on public transit for a long time. He's like a hometown hero in Florida. So appreciate you joining, Kevin. Appreciate the work you're doing. I appreciate the fact that you sent me some of that stuff. It's heartwarming stuff when you see it, to see him out there and how much outpouring of love and support he gets from his people. I'm pretty sure it's Florida. Correct me if I'm wrong. Mail Cold. Good to see you back, man. Happy to have you here. You got to tell me what's what the meaning behind the name Mail Cold is, because I'm just curious. There we go. What I like to hear, Utah listings are starting to increase, and something we can talk about today. Today's like mortgage headline, at least for me, the one that stood out. Like I get up in the morning, I got Mortgage Bankers Association and different publications I'm reading just to kind of get a feel for what is up with mortgage news. It was home buying sentiment hits all-time low. And so it's going to be interesting to see. I don't see things slowing down. I don't see people slowing on their home buying purchases, but for whatever reason, this latest consumer sentiment poll they took showed it at an all-time low. I think it's more frustration than it is buyer sentiment, because I think people deep down understand things aren't getting cheaper, and so they're just frustrated. See, there you go, Theo. This is the type of constructive criticism feedback I need. It helps to get notifications 30 minutes prior. How do I do that though? Do I do something within YouTube? Do I go live like 30 minutes prior and then have like just that 30-minute countdown rolling? Is that something? I don't know, man. I like everything I do in business is just keep doing it and keep asking questions and keep honing the process until I get good at it. That's like my mortgage business is keep doing deals, keep figuring out, here's the stuff I did right, here's the stuff I can improve on, and keep doing more of the right stuff, keep improving on the stuff that's not the most efficient or the best, and then rinse and repeat and get better, like 1% better every day. So we'll figure that out, Theo. I'll put that on my list of things to do. I should start a list. Because I do enjoy this. I'd love to have 100 people on here live. I'd love to get up into the win the house you love realm. Some of these big shot YouTubers that have hundreds of people live. I'll get there. Don't you guys worry. You guys keep coming back. Keep pumping me up, and we'll get there. Mona, welcome back. Good to see you. Good to see you. All right, Kevin. 17th year at Citrus Connection. That is cool, man. A lot of people, especially nowadays, new job every 2 years. 17 years strong, volunteering out there in Florida. Good stuff. trying to buy my first home. It's super frustrating here in Sacramento. I get you, Tina and Devin. I'm not sure who you're working with, but it's more than likely a function of the market and not them. What I will tell you is, I have clients who are frustrated and, they're like, I'm either going to take a break or I'm going to do something. I really feel, and coming from a guy who does a lot of business, and so I get to see a lot, hundreds of clients, 85 to 90 people fully pre-approved out there putting in offers, dozens and dozens of agents I'm talking to every single week. I feel more stuff getting accepted. And so I feel goodness for you is what I'm trying to say. I'm not sure where in Sacramento you're trying to buy, but I know that a lot of my clients have either expanded their search criteria where it's like, okay, we're not just 95829. We're going to look in other zip codes as well. I've even had clients that buy in Marysville or whatnot. I'm not saying that's the answer for you, but keep trucking. Like Liberty Returns is saying, they've got more listings coming. I think from February to my last live, we tracked like Sacramento and surrounding went from 1,200 listings to 1,600 listings. 1,600 is super low historically, like less than half of what we'd like to see inventory wise, but it's still up 33%. So offers you were putting in 2 or 3 months ago, you were putting in offers on, a market that had a lot less houses. Now there's 400 more. I'd be interested to know, like, I don't necessarily need to know exact, but I mean, shit, I'm in Sacramento. So I feel like I can give some insight on like what price range you're looking in. And give me whatever information you want to give me, and I'll try to help any way I can, because different areas, different price points, your specific scenario, all of it kind of plays into account. If you're submitting offers in an area where, it's like 400K, man, you're just competing against so many people trying to buy their first house at 400K. And so it might be listed at 379 and they go up to 4.25 and they go up to 425. And, waiving appraisal contingency is like the minimum barrier to entry. There's other places and price point where, you might be able to write and say, I'm going to offer to bridge a gap of 20,000 between appraised value and purchase price or something like that. But give me whatever info you'd like to give me, and happy to give you my 2 cents for what it's worth. And then if nothing else, I'm gonna wish you some good luck and tell you June is your month. You guys might get something to stick this month. I got a good feeling. As long as, I think the best advice I can give you is really honest advice. If you tell me like, oh yeah, we're looking at the $400,000 price point. We've submitted 4 offers and we've come in 10,000 above ask. We haven't waived the appraisal contingency because we don't want to do that. I'm just gonna be straight with you, man. Like, it's not gonna get it done. Sacramento is a popular market. And so, yeah, that's that, dude. I sometimes feel like I got to give people honest advice, even though it might hurt, just because it's what's going to serve them the most versus telling me what they want to hear. The more speculation, the bigger the bubble. I have a feeling correction will happen within 12 months. I disagree, but that's okay. There's just way too much demand and not enough supply. And you're correct in that paying way over appraised value is speculation in a sense, but there's I don't know. I had a conversation with a client today who was telling me like, Matt, I've got all this money sitting on the sidelines. He's an investor trying to buy investment property. His story is so familiar to me because I work with so many investors. Like, there is literally demand behind the demand. And so if rates tick up, if inventory ticks up, if all these little things that can affect the supply versus demand, and you think that it's going to weaken the housing or it's going to cause prices to correct a little bit, they can't correct too far, in my opinion, because we've got like behind this line of buyers and this, huge crowd of demand, if they all move out of the way and they say, we're leaving the party, the backup party's right behind them. People with bags full of money that cost very little to borrow. Even if rates go to 3.25, 3.5, 3.75, that's really still very cheap to borrow. So, yeah, I don't see a correction. I mean, 2022 being flat and very little home price appreciation, 1 or 2%, I can see that. Correcting by 10%, I doubt. Correcting by 20%, I'd be willing to bet a large sum of money. But, I'm a guy on YouTube, and so your guess might be as good as mine. I've been wrong before. Hello, Janice, Cape Cod, Massachusetts. My mom lived in Boston for a short time when she was working for Delta Airlines. Cool place. Only got to visit it like twice, because I think she was literally like Atlanta and then Boston. I don't think she was there very long. I don't recall. It was like 25 years ago. Gosh, was it that long ago? 21 years ago? I'm getting old quick. Hey, what's up, Theo? I saw that comment on one of my videos, and in my head, I responded to it. But since you joined me here, I'd be happy to. There are some interest-only loans on investment properties. Here's my personal opinion. I don't like it. And what it does is it lowers your payment because you're only paying interest. But one of the great things about real estate investing as a whole is it's appreciating over time, and you're paying down the mortgage over time. What happens when you have an interest-only loan is you're not paying down the mortgage. You're only paying interest. So what you owe $300,000. You pay interest only for 3 years. You still owe $300,000. I think that if you need the cash flow that bad, the $200 or $300 extra that you'll get because nothing's going towards principal, or you need that interest only loan to make it cash flow, then it's not a very good investment. The best real estate investments are ones where you buy it and you have cash flow, you have appreciation, you have debt pay down, and you have all of it at once. In this scenario that you're talking about, you're sacrificing the debt pay down because you're not paying it down. There's nothing going towards principal. It's just interest. And so I'm not a big fan of it. I guess there's some people that say, why am I paying down this 3% or this 3.5% mortgage debt when I could be deploying that capital elsewhere? So that's the argument, right? Is like, I'm saving the $300 a month, but if the capital I have invested in the stock market or in real estate investments elsewhere is making 6, 8, 10%, then I'm doing better. I don't know if I subscribe to that, but the ones that are out there, what's going to happen is you're going to pay a higher interest rate. You're going to pay a higher interest rate for paying interest only. It's going to be limited to only a few lenders that will do it. And so I don't know. That's my take, which is literally all cons. The only pros are that you're able to pay less per month, get more cash flow, deploy that cash elsewhere. But where I see it more often, and I think I've had or heard discussions of it, both commercial and residential properties, is where somebody needs interest only to make an investment pencil. That's a bad idea. That means it's not a good investment. You're like, okay, we can't pay this thing down and have this thing cash flow. We're just going to bank on appreciation. We're going to bank on forced appreciation by doing rehab. We're going to bank on all this other stuff, but we can't be paying principal and interest and expect this thing to be cash flow positive. That's too much to ask. That's when you start to doubt, like, is this thing a quality investment or not? So that's my 2 cents for what it's worth. Thanks for the question, though, Theo. Good stuff, man. I'll answer it on the YouTube video as well. And I'll add anything else that I think might be relevant. Patricio Martinez, ¿cómo estás? Hello, I made my first payment coming out of forbearance. How soon can I refinance? I have PMI on my mortgage. So you can refinance right away. Almost all lenders will let you refinance right away, depending on what type of loan you have. I've done a ton of these now, so I feel like I can now speak on it and have an expert opinion because tons of people have exited forbearance. Tons of people we've done refinances for. If it's an FHA loan, what FHA has been doing is more than likely you're going to exit and they're going to say, what do you want to do? You want to pay it all now? Do you want to pay it over the next 12 months? Or do you want to put it on the back of your loan? You're going to say, what makes you think that I have $40,000 laying around? Of course, I want to put it on the back of my loan. So from everybody I've talked to, 98% of people are going to put it on the back of their loan. If you've got an FHA loan, they take that year of payments, whatever that is, $30,000. They turn it into a HUD lien and they put it on the back of your loan. So it sits on there and it basically looks like a second and acts like a second. You've got your first loan and you continue to make payments, $2,300 a month, whatever your payment is. And then you've got a HUD lien for $30,000, generally not collecting interest, generally just due upon sale or refinance. So it'll just sit there, right? So they slap it on the back and you say, hey, I want to refinance. I'm doing one right now. And we just get the payoff like we would if it was a home equity line of credit or it was a second loan in your home. We pay off the first, we pay off the second, and we refinance you that way. Works very similarly if it's a conventional loan, where you're just going to refinance, pay those off. And so as soon as you're out of forbearance, like you said, you've already made your first payment, you're eligible to refinance. You just would qualify like a normal refinance and go from there. So, yeah, I would be curious too, if you had any conversations exiting forbearance about loan mods. I've had plenty of people do that. And listen, as a mortgage broker, it's going to lose me business to have somebody do a loan modification versus a refinance. But as a consumer, do what's best for you. Ask the current servicer, what kind of loan modification can you offer me? If they tell you, hey, we can lower your rate to 3%, and you're not paying any refinance fees, like, do it. Skip Matt the mortgage guy. Skip paying, the title fees and pay for an appraisal and all that other stuff. Go straight to them. I don't know. Some are offering it, some are not. I would at the very least just ask, right? Doesn't hurt to ask. And while we're on the subject of refinance, if anybody's interested in Refi Now, that Fannie Mae program, that is for folks that are below 80% of the area median income, is out today, June 7th. And so all the lenders I work with as a broker have, their email blasts going out, available now. I've had a few people reach out to me because I did a video last week, and under 80% area median income has to be a Fannie Mae loan. Let me show you guys something here. Share screen. I did this earlier because I was working on it for somebody. What did I do with that? Okay, I'm going to share this screen. And so if you Google Fannie Mae lookup tool for this loan program, and you're like, hey, I might be eligible for this. I make less than 80% of the area median income. This is my information and a rental property I own. You put in name, address, last 4 year social, get results. And then bam, it'll tell you Fannie Mae loan lookup results, match found. It looks like Fannie Mae owns your loan. It means you may be eligible for certain Fannie Mae only mortgage relief options. That mortgage relief option right now is a program called Refi Now. It goes up to 65% debt to income ratio, which it does that. And it's meant to help low income folks who would not normally qualify. Again, you can't make more than 80% of the AMI, area median income. So I say low income folks because you literally can't have $100,000 a year in income and qualify for this. You have to be below 80% AMI, up to 65% LTV, There's no 50 basis point hit that was implemented last year, so the pricing is better. There's a $500 credit for the appraisal, so you don't pay for the appraisal. There's a cap on the total amount of fees that can be rolled into the loan. You have to have a certain amount of savings per month. There's all kinds of good stuff. The only downside to it is limited people are going to qualify. You're going to have to be Fannie Mae. So this is the first step, is looking you up. But I had a client reach out to me earlier who fits into here. Now we got to figure out, all right, is your income qualifying? And the crazy part is you have to be below a certain amount to qualify, but then you have to have enough to qualify debt to income ratio wise. So it's a small bucket, but those who do qualify will benefit from it. So anybody have any questions about refi now, just Matt@mattthemortgageguy.com. Shoot me a message. Happy to help. Joey Gracie. Am I saying that right? Gracie, what's up, my dude? I'm glad that found its way to you, man. I put the Matt the Mortgage Guy swag and the one rental at a time book in a UPS box and sent it on its way. Hopefully you're enjoying it. The changes for the Home Possible. Yeah, it used to be that you could, if you're living there, you could put, I think it was 5%. I don't think it was ever 3%, but you could buy a 2-unit conventional, 5% down. That ended in April this year. So sorry, dude. Like the house hacking low down payment is now limited to just FHA. So you got to buy a 2, 3, or 4 unit with FHA 3.5% down. And then after you've done that, you're kind of limited to just buying Gracie. So I nailed it, bro. Gracie. And you're right, it's 15% now. And if you're going to put 15, like why not put 20? Because you're going to pay mortgage insurance on 15. So if you're trying to house hack and you've already used up your conventional, your FHA 3.5% down, your next one is going to have to be a bigger down payment, or maybe what I've seen some people do is, you've owned that first place for 2 years, it's gone up in value, refinance it conventional, either do that, kick it for a year and then buy FHA for your next house hack where you're going to live in it again, or refinance it conventional as an investment property, buy FHA right away. But there's all kinds of different stuff. Who did I talk to? I talked to a mortgage broker back east who had a cool thing he was calling his 4-3-2-1 program, where he helped someone buy a 4-unit and basically house hack, and then they move into a 3-unit house hack, and they move into a 2-unit house hack, and then they buy a single family. And by the time they've bought a single family house, 6-8 years, however far they are into it, they've got the other 4-3-2, 9 units of rental property, and some good monthly cash flow. So pretty cool stuff. Preston, thanks for joining, my man. How do charge-offs affect you in getting a loan? If you have like 10 or more charge-offs, but your credit is above 690 now. I think it depends on what the charge-offs are. If you've got a 690 credit score, my guess is that they're fairly old. And so that's why they're not dragging you down. Because, if you had recent charge-offs, then it probably wouldn't be 690. I'm trying to think of what is it that factors into your DTI. Send me your specific scenario, and and even if you have like a copy of your credit report, I'll help you look into it to see how a lender's gonna look at that for you. I don't want to answer live something wrong and then have this someone come back and be like, I heard you say this, Matt, and it was incorrect, because I'm blanking on a specific answer for charge-offs. Because what is it? There's like a certain percentage of collections that we have to hit your DTI with. And I'm not sure I don't think we do the same with charge-offs when we're going Fannie Freddie, but I don't know. I don't want to answer it wrong. Too much mortgage knowledge in my brain. That one escaped me. Georgina, there's no stupid questions. Ask away. Trust me. After seeing a million scenarios. We just saw something that I was stumped on, which I should know. And so don't feel like you got any stupid questions, because it's more than likely going to be something that somebody else is asking about as well, or curious about, but maybe they're too afraid to ask. So thank you for asking on their behalf. After closing, buyers get a copy of the grant deed. Oh, this is a great question, Georgina. You don't even know how good of a question this is. The title company sends you the grant deed. All this stuff, right? The latest scam in California, I don't know if this happens in other states, but it's public that it records. So you'll get something in the mail from this company that's a scam that says, hey, Georgina, pay me $85 for a copy of your grant deed. They pull the public grant deed and they send it to you. So they deliver on what they told you, but it's not like your official grant deed from the title company. The title company will send you that stuff. The note is in your final package that you sign at the title company with the lender. So all this stuff you'll get from the title company. I guess it might be different if you're in a different state, because different states don't necessarily deal with title companies like we do out here in California, where we deal with escrow. If you're in one of the states that deals with attorneys, maybe the stuff comes from the attorney, but you'd probably want to ask somebody in your specific state about that. I was just dealing with a client who's moving from New Jersey to California. We're asking for different documents and realized real quick, like, oh yeah, you guys do it different than we do it in California. In California, we've got the escrow company that handles everything. And then, back east in a lot of states, I know it's like an attorney who handles it. So good question. Just know that like post close, especially where I'm at, you're going to get a ton of mail asking you to send money for silly stuff like a copy of your grant deed. Don't do it. Scam, 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 scam. Is the government going to help landlords refinance that could not evict tenants that were not paying rent for a year? It's a good question. I haven't necessarily seen landlord mortgage relief type stuff like this. What I have seen is like the $50 billion in tenant relief, rent relief that landlords and tenants are able to apply for. I've got my property manager who's in a different county than I'm in applying for back rent pay from the different housing agencies who got government funding to say Joe Schmo did not pay rent to Mr. Matt, the mortgage guy, for 8 months. Let's see if we can get Joe Schmo's rent current. And I'm happy with it. I wish Joe Schmo would have been able to pay it, but Joe Schmo couldn't. And so the housing agency for that county is going to reimburse me. And I remember too, it was like you were going to have to settle for 80% of it. That was my buddy Gavin Newsom, the mayor of California's deal. And then it turned into, no, they're going to get 100%. And so good news is we're getting 100% now. I just don't know when it's coming. Anything that has to do with a government agency in California, don't hold your breath, because you will die holding your breath waiting for a government agency in California. Sorry, government agencies in California. You guys are just slow moving. All right, Joey. Fiance is starting her first job out of grad school. Would she be eligible to get a mortgage based off her income after a month in the new job, since the job relates to her grad school degree? The answer is yes, sir. Let's say she was studying, I don't know, to be a nurse, had 2 years of nursing school, and then got hired on full-time, salaried job, good to go as soon as it starts. Here's the caveat, Joey, is that it has to be salaried, because we have to know what she's going to be earning. If she gets a job that's paying 100% commissions, gets a job that's somehow variable, then it's going to be tougher. But you get a job that's $8,700 a month, and you've got, an employment letter or something like that, then you use the schooling to make up for the 2-year work history. And all of us, and we already know, what the salary is, then we're good to go right away. If it's variable or something, then it's going to be tricky. But salary, W-2, Good to go right away. I mean, even with an offer letter sometimes before the job's even started. All right, Chief. I bought for 330 at 2.8%. I'm down to 310 owed. But it's gone up to 386. Should I refi? Heck no. Why would you want to refi that 2.8%? That's a sweet looking rate. And really, here's what a lot of people don't understand. 386, if you were to refinance, cash out, rate and turn, like whatever you're looking to do, your loan amount is limited to, here's one. Well, I take back, heck no. So if you bought for 330 and you owe 310, what'd you do? Put down 5%? You must have put down 5% because now you owe 310. Only reason you refinance is to remove mortgage insurance. How big is the mortgage insurance? Because you'll probably get the same-ish rate because now you're at like 80% loan to value. It's worth 386. You owe 310. It's going to be close though. You can refinance. 108 a month. I probably wouldn't. I would probably send a message to the servicer about removing mortgage insurance. I'd leave the 2.8 alone. To refinance, here's the thing. If you refinanced, even the cheapest lenders, flat fee of $1,000, $1,200 in title fees, $500 appraisal, give or take $3,000 in lender fees to pull that $100 a month off and keep your same rate, it's going to take you 30 months to break even. Instead of waiting 30 months to break even, why don't you pay 108 for another 12 months? Tell your lender, hey, I want to remove mortgage insurance. My house is worth 386 and I only owe 308. And that's the magic 80%, 20% equity. Let them remove mortgage insurance without a refinance. That's my best advice, I think. Because it's there's not enough benefit. If you're paying $200 a month in mortgage insurance, then I'd say, all right, let's just do it. Let's just refinance. And I'm in California too, so I could even do the deal. And I'm saying probably not. Yeah. All right, Naruto Brown. I love the question. I appreciate you being here. But this is kind of like someone asking me, how much does a new car cost? There's Jettas, there's Lamborghinis, and there is Ford Explorers and Range Rovers. They all cost something different. Cash out refinance is different if you got an 800 credit score. It's different if your house is worth $1 million and you're refinancing 400,000. It's different if it's an investment property or it's a primary residence. It's different if all kinds of stuff. Single family, duplex. We got lots of variables. I'm doing a lot of refinances right now. Cash out. If the loan to value is under 60%, then we're under 3%. Example, $600,000 value. I'm doing a refinance for $350,000. I can get them a cash out for under 3%, $299, no points. This is not an offer to lend. NMLS number 1088993. I'm just saying, real life example happening right now. Submitted it today. So yeah, if you give me more detail, I'm happy. I'll price it. I got nothing to hide. But yeah, that's that. All right, Jason, that they're doing it in Nevada. I mean, it works, right? And you do $85 a pop. People like, screw it. What's there to lose? $85. And these people's PO boxes or mailboxes are full, man. If anybody asks you for money for a copy of your deed, it's a scam. If I can't help everybody, I can help the 40 people that are watching live. Speaking of 40 people watching live, I'm going over to YouTube right now and I'm checking to see how many likes we got. If I've got less than 20 likes, half of you guys are not showing the proper amount of love. 8 likes. All right. Let's get 20 likes for the YouTube algorithm. All right. I just went over there. I think we're at 11 likes. Show me some love. I don't know if it helps even, right? Maybe it does. Maybe it doesn't. Maybe it matters to me. I don't know. Is that like something that's in human psychology now? Like to feel worth something, I got to have people like my friggin' live. I don't know. Maybe it helps. Georgina. Yep. See, California. They look official. They look super official. All kinds of stuff that comes in the mail looks official. If you close on a home loan in California, rest assured you're getting 10 pieces of mail every day for 3 months. And one of the other really cool scams is you'll get something in the mail. If you do your loan with United Wholesale Mortgage, it's all public, right? So they know it. And it says it's like United Wholesale Mortgage and your name and like it's like fine print, like in regards to your loan with United Wholesale Mortgage. Then like little tiny print at the bottom, it's like we have nothing to do with them. We're just some crap company that spams the heck out of people and tries to get you to do business with us. I don't know. I'm not a big fan because a lot of those places do bait and switch techniques where they're trying to offer you a 0.23% interest rate, and then you realize it's $9 billion in cost up front. Anyhow, rant over. Will loan modification after forbearance affect credit score? What are the questions to ask my mortgage servicer? This is a good question, and I do not think it does. Somebody tried to tell me that like they'd have to get behind on their payments. They're afraid it would affect their credit. Like that doesn't make sense. They should be able to modify you like right away. And I don't think enough of them have been done to really even know how they're going, how smoothly they're going. And so it'll be interesting to see, but I don't think it should. The clients that I talked to that said they got offered loan modification, like lowered rate and a 40-year term, said it was super easy, no documentation, and they're going to enter into like their trial period. They're going to make 3 payments, and this can be like official. Okay, now you're in this new loan modification and whatnot. So that seemed like cool. It's a good idea. I'm going to get feedback too. Like I actually followed up with that client to ask them. Let me see if I can find it. I've got it on text. There was no docs required at all. This is verbatim text from a cool past client of mine. It was literally a conversation with my assigned person. He didn't easily volunteer this option, but I asked about it and he quickly offered it. By the way, they get you to do it instead of a normal refi is because the ease of it. And I mean, I'm not offended at all for a past client doing something like this. Like it's in their best interest by far. And so, yeah, ask for it. Ask your current servicer, like, what do you got for me? And like she said, it wasn't offered at first, but after asking for it, fairly quickly offered it up. No documentation, no anything. Do the dang thing. Cool. All right. She's salary, you said. Hoping she'll qualify. Home possible. Even if not, like home possible is like slightly better rate, slightly lower MI, but not like insanely better. I was looking at that yesterday and I was like, man, it used to be like a pretty big incentive to take somebody home possible or home ready because it was like a lot better terms. And nowadays it's so close that oh, look at that. We're up to 33 likes. Thank you guys. Crushing it. That's all you got to do is ask. That's a lesson in life, man. If you want something, just ask for it. I don't know what it does. But oh shoot, were these people asking? Oh no. This is all. I was like, do I have different questions when I go to look at it in YouTube versus where I'm streaming it? Man, you guys, mortgage, me good. Tech, me not good. This is No problem, man. I'm in California, so I'm your guy. Matt at mattthemortgageguy.com. Anytime you got mortgage questions, your next purchase, you're thinking about doing something in the future with this loan, but really like 2.8%, 30-year fixed, more than likely you're staying put for a while. Unless rates are still great 3 years from now and your home's appreciated 500 grand. You're like, Matt, can we do a cash out refinance? Keep my rate at 2.8, get me about 60 grand in cash out to go buy a little Airbnb property in Big Bear or something. Then we can chat. But for now, you probably stay put. All right. Gracie. Oh man, where'd the pronunciation go? Oh, Gracie. Gracie. Okay. Back to my boy, Joey Gracie. This Bank of America down payment, I put it on my notes to do a video on this because my buddy Kyle Seagraves did one on it. And everything I've heard about it, it's freaking smoking, right? Like 17,500. I haven't heard of anybody having success with it, not because it's not a good program, but because of the market we're in. I can't imagine. I mean, here's the thing. I deal with buyers all day, every day, writing offers all day, every day. I'm talking to agents all day, every day. I can't see any of them being like, oh yes, we would love to accept your offer. Like, you show agents a pre-approval from a bank and they're not excited. Direct lenders and brokers are closing loans fast. Banks, not closing loans fast. It's not a dig. I'm not knocking down other buildings to make myself look taller. They just are not good at closing loans fast. And so, with that being said, I literally haven't heard of anybody using this and closing on it. But it sounds like a good program based on everything I'm hearing about it. Maybe if the market changes a little bit and they still got some monies left that they're trying to use to help people get into their first home, it'll be good. But yeah, I don't know. Joe Murillo, thanks for joining, man. I appreciate, I've got lots of loan officers that have reached out to me, and especially like you're a newer loan officer. I love you joining. I love you asking questions. I really think that this is a great place. When I was first starting out, just talking mortgage and being around mortgage conversations is the best place, because then you're hearing real life scenarios. These are real questions from real people that have, real scenarios. And so this is the kind of stuff that you're going to be exposed to as a loan officer, rather than waiting for the questions to come to you and taking 5 years to learn this stuff. Get in forums and you see the questions there. Get in, something like this where people are asking stuff live. Go wherever you can to just be around question, answer, and seeing all of it. And that's where you're going to learn a ton. As far as this specific question, would you recommend me to work for a broker or a direct lender bank? This is hard, man, because I've had a lot of people come to me with this question locally, and they're getting started out. They're like, hey, Matt, I want your opinion. I personally worked for a direct lender for the first 5 years and then became a broker, and have been a broker for about 3 years. So in my 8 years in lending, I've spent 5 years in direct lending and then 3 years as a broker. I've never worked for a bank. I know a few people that work for banks, and I don't think I recommend a bank just because I don't think it's the best place for a consumer to get a loan. I just think that their processes are kind of antiquated and clunky. And if you're going to get started, what I would probably recommend is one of those two, a direct lender or a bank. There's a lot of direct lenders that have really good structure. And sometimes when you're new, you need structure and you need training and you need mentoring and things like that. And so just like if you're an agent, you might go work for Keller Williams, and the people that would complain or knock on Keller Williams would say, I'm giving up a percentage of my commissions and I'm only making 30% of the deals that I bring in. Well, if you're making 30% of a watermelon, that's more than 100% of a grape. And so, work in an environment where you can see more deals, be exposed to more deals, and learn things more quickly. I like to think that people who are involved with me and my team, even if they're not getting every single penny on every single deal that they're bringing in, they're going to be around 40, 50, 60 deals in process at all times, seeing scenario after scenario, even if it's not their deal, if it's my deal. And so they're learning, because in my experience, and for me personally, and for a lot of people I know, it's really, really hard to learn reading books and just studying the stuff, right? The way to learn is to see the deal and to go through it. And literally, like, if you go back through my YouTube, every single video I've ever made is a question I got or a deal I did, and I go, oh, that's something new I learned. I'm going to make a video on it. Oh, that's something new I learned. I'm gonna make a video on it. And that's how you learn. And so that's my advice. I don't know if I answered it that well, but I think you could probably survive and thrive in both places. Look to be around people who are where you want to get. And even if no matter where you land, always look for, your first year, you might do 12 deals. Go find someone who's doing 50 deals. What are you doing? How do you get 50 deals? Talk to them, see their processes, see what they do. Then next year or the year after you do 50 deals, you got to look around and say, who's doing 125 deals? What are your processes? Who's on your team? Who helps you chase STIPs? Who helps you collect this? Who helps you do pre-approvals? Who helps you this? And that's exactly what I did. And then I said, okay, now who's doing 250 deals? And then when I did 250 deals, now I got to look for people that are doing 500 deals and ask them what they're doing. And next year, when I do 500 deals, I'm going to have to find people that are doing 1,000 deals a year. And I'm going to have to look harder to find them, but I'll eventually find them. And then I'll say, wow, you've got a team of 12. How do you structure it? Who works on this part of the business? Who works on that part of the business? And so hopefully that was helpful. Just me from my experience. Oscar Cordova, appreciate the kind words. This is fun, man. This is really fun. If I didn't enjoy this, I promise you I wouldn't do it. I'm having a ton of fun doing it. I think that it's valuable and it's needed. And this whole YouTube thing between videos and live streams and whatnot, it's brought me a little bit of business. But the coolest part about me and my business is I'm at a point where I'm not starving, not skinny. So most of the stuff I'm doing, and this included, is because I enjoy it. If I didn't enjoy it, turn this thing off and I'd be just fine. I'd wake up tomorrow fat and happy. But I enjoy it, so I'm gonna keep doing it. So thanks for the kind words, man. Like, and that's like the fuel right there. Is it somebody who's in Illinois is like, oh, you helped me so much. It was so helpful. That fills me up more than commission paychecks. I've had enough commission. I'm full on commission. I'm fat and happy. See, this is like a counseling session. We all want a little bit of love, that positive reinforcement, some likes, man. If you don't admit that, you're lying. What are the benefits to loan modification versus refinance? Loan mod, if they'll give it to you and they'll give you great terms, the benefits is it won't cost anything. I'll say it here, and this is one of those loan officer exposed or behind the curtain, whatever you want to call it, the truth, right? A refinance costs money. If somebody tells you refinance doesn't cost money, they're lying. There's lenders' fees. If it's a broker like me, it's not a lot. There's one flat fee. Most lenders I work with, $9.95, $10.55, $10.95, one flat fee. We don't charge processing. I'll get your rate with no points, so it won't be any points. So the only thing in box A will only be $1,000, but it's still $1,000. Then you've got title fees. Even the most, thin of title fees and the best of title companies would charge you about $1,200. If an appraisal is needed, the appraisal costs you $500. And, just those three things were in the 3,000-ish range. Sure, it gets rolled into your loan. Sure, it doesn't come out of pocket. The appraisal usually does. But it's costs. And here's the tweak, because I get asked this question all the time. I want a no cost option. I want a no cost loan. Everybody offers them. I offer them. Any loan officer you talk to offers them. If I can get you a 2.875 and I've got 3,000 in fees, I can also get you a 3.125, no fees. The lender offers a $3,000 rebate for that 3 1/8. And then you give you that $3,000 rebate and say no cost loan. The no cost loan costs something. We just canceled out that cost with a higher interest rate. The higher interest rate got us a rebate. We applied it to pay for the costs. Nothing in life is free. Especially big banks, big lenders. You think they like it's United Way? There's a big charity. And so yeah, that's that. So if you can get a loan modification, it's free. If it's better, if the terms are the same, do the loan mod. Don't call me. I got to charge you. I'm sorry. But here's the thing. If the loan modification is 3 1/4 and I can get you 3 1/8 and give you the credit and do it for free, then maybe I'm better. But that's the basics of it, I think. And I mean, to be completely honest, some of these loan modifications that I'm hearing about or seeing, or like I have got a client who actually got into one, they're offering you a lower rate and a 40-year term. I don't even really have any lenders that can offer that 40-year term. It's loan mod only. So, interesting. Check them both out. See which one's better. Darren, thanks for joining. Title company lost the certified Earnest check I sent a month ago. They wanted me to pay it again. Closing took 6 hours and I had to get a replacement check from my bank. Thanks for all the advice. Yeah, no problem, man. It's crappy that they lost the check. Did it take them a month to realize it and tell you like, oh, hey, we don't have this. We don't know where it went. We have a few rentals. Is there a way to get more rentals with just 10% down? I don't know. I mean, there's certainly not any Fannie Freddie conventional stuff out there. It's 10% down. There might be, and I say might, I haven't heard of any, some sort of private-ish type non-QM lenders out there that are doing 90%. I don't think so. Shorter answer, I don't think so. Boston, USA. Howdy from California. I own a condo. What is that in the background of your emoji? It's like a scary little, it's like a Chucky doll or something. Scare the crap out of me. I would like to rent out this condo, but the HOA is not allowing me to rent it as more than 10% units in the complex are already rented. I don't think you can file legal action. But it's interesting to like try to I mean, what are they going to do? What are they going to do if you rent it out? Get a lease agreement, move a renter in there? Like, I don't know. That's interesting. I really don't know. I haven't encountered that before. I've encountered it where I can't lend to somebody because more than a certain percentage are rented, or one owner owns more than a certain percentage in that condo association. But I've never had somebody tell me they couldn't rent something out. That's interesting. All right, guys, you're asking about the B of A grant. Darren Buttery closed a loan today. Congrats, Darren, on a closed loan. That's good stuff. Bank of America grant. Any information you want to give here, let us know. Let us know what state you're in. Let us know how long they took to close it. Let us know how much you got, because I think it's like $17,500, but it might be a percentage of your purchase price up to $17,500. I don't know all the details on it. I was going to get the details to make a video. I just didn't see enough of them being done in this market for it to be worthwhile to make a video on it. But I'm all for whatever's best for the consumer. I don't work at B of A, not affiliated with B of A, can't do these. But if it's something that'll serve people, I encourage you, please tell us whatever information you've got. And, obviously you closed on it. And from what I understand, it's forgivable. Like, you're not going to pay it back. I wonder if you tried to sell in 3 years, if you would have to pay that back. If there's like a seasoning period, you got to stay in the home for 5 years or 10 years or something. All right, Georgina. Big banks often offer relationship discounts. Eighth off for $250,000 in new money, up to 0.5%. Do other lenders have such programs, and do brokers have access to such? Thanks again. No, I mean, there's no relationship discounts from a broker because we're not selling you a checking account, a business account, anything else we can make money off of. But what I will tell you is, from what I've seen, let's say Bank of America is at 3.375 and I'm at 3%. You can put $500,000 in there and get down to a 3 1/8, and you're still an eighth higher. So it's not doing you much good to have that relationship discount. One, if it takes you $750,000 to even match my rate. Two, if it takes them 45 days to close, and in my market, you write a 45-day offer, you're going to get laughed out of the building. And you just aren't going to get your offer accepted 99.72% of the time. But where I have seen that maybe be something of value is in the jumbo market. If you're buying a $1.5 million house and you're putting 25% down, big banks, Chase, B of A, Wells Fargo, they want that business. So they are possibly going to be a good option there. On the conforming conventional stuff, under the conforming limits, one, they're not competitive on price from what I've seen, and two, they're not closing fast enough. I mean, I've not seen anybody in my market. I think they've just learned, and enough realtors know. They'll get a client that comes over like, "Hey, I'm pre-approved with Navy Federal Credit Union," or "Hey, I'm pre-approved with Wells Fargo," and their realtor's like, "All right, before we go put in offers, go get pre-approved with a local lender who can actually close a loan, and then we'll submit, because we're submitting with that." It's kind of like submitting 50,000 below ask. You got no shot. I don't know. That's my personal opinion. All right, Catherine Merg. What a nice question. Good gift for your loan officer after closing. He went above and beyond and really saved the sale by being very available. Even took a call from the listing agent when getting on a flight. Now, this is the success story I want to hear. I'll tell you guys something that's pretty friggin' cool. Is I've got somebody coming to my office tonight, somebody I just closed, and he is cooking an authentic dish from his culture. And he was like, "Hey, Matt, how many people on your team?" He wants to make it for everybody. Unfortunately, everybody on my team works remote. And so I just said, "Bring it to me. I'm going to share it with my family instead." And so I'm getting a good Indian dish tonight. I think that's a cool closing gift because it's personal, right? And that's the beauty of doing business in California with a diverse bunch of people is, I'm going to get some cool, authentic Indian home-cooked food. And so, something like that that's personal is something that I would think would be a cool gift. Maybe you get him like some sort of cool, like personalized calculator. He's a mortgage person, right? And if his name is friggin' Dan the Mortgage Man or whatever, maybe you get like a calculator that's got like Dan the Mortgage Man engraved on it or something. That to me would be cool. And anytime I get any type of gift from a client, it's a cool thing just to know, like, man, they think I did a good job, and my team gets most of the props for all the accolades we get because they're handling the mechanics of the loan. But yeah, good for your loan officer. Good for you for thinking about a gift. Hopefully, whatever you end up doing, he's going to appreciate it. And congrats on the closing. All right, Carlos, a 15-year, 5.69%. Is 2020 when you got that loan? There's no way you got a 15-year for 5.69%. And a 30-year FHA. Is it on the same property? No. You got two different loans on two different houses to cash out, refinance, and combine them. You can't necessarily do a cash out and combine like two loans on two properties. If you have enough equity in your primary, what I've seen people do is, let's say your primary is worth $1 million and you have 300,000 on one and 200,000 on your rental. You could do a cash out refinance to 500,000, take the cash out, pay off the rental if it makes sense there. But yeah, I don't know if let me see. No, that's somebody else. I don't know if I'm following what you're trying to do. I want to do a cash out refi and combine them to get cash out. Yeah, it sounds like you're trying to combine two different loans in two different houses, one loan and some cash out. There's no like cross collateralizing with multiple properties. Most lenders aren't going to do something like that. So unfortunately, that's a no-go. All right, Naruto Brown, primary home, 575 at 180, 800 credit score. I'd like to pull out at least 200K. All right, here it is. This is the live pricing. I haven't gotten in trouble yet for doing this. So primary 575. I bet you it's going to be right around 3% for a cash out. 180, take out 200. We'll call it a 385 loan amount. On 575, cash out. Some California zip code. Here we go, the moment of truth. Rudo. Wanted me to put a name in there. All right, I'm guessing without paying points, you're going to be about 3%. All right, computer's loading. Yeah, you're above 60%, so it's like 3.1. 3.1% with no points. 3%, about a half a point. It's about $1,800 cost. You can get a 3%. Actually, a half a point gets you 2.999. Then then it gets too expensive after that. 2.875 is a point. So either 3.1 for no cost, probably the best, and then 2.99 for about a half a point is what you would have on that 200K cash out. And really that's on 575 where the pricing changes is at 60% and then again at 75%. Because you can go up to 80% loan to value on a cash out. 75 to 80, expensive. 60 to 75, less expensive. Under 60%, smoking rate. So for your purposes, 575 times 75%. If you go anywhere from 60% up to 75% is 431, 250. So you owe 180. You could pull about 240, 245 out and still be at that, 3% with a half a point cost. And then you take that money, you invest it, you get 10% return, you become the millionaire. Hopefully that helped. All right, Darren's going to give us an update on his B of A grant. This is what I've heard on this too. You can use some of the closing cost grant money to buy down the interest rate. So at 2.625 for 30 years, he's in Illinois, 45 days to close. 3% or 15K for down payment, whichever is less, and up to 75% for closing costs. So you must have had a smaller loan But a 30-year fix at 2.625, smoking. And it sounds like, yeah, 3%. So I guess you must have bought something like under 200 if you got 7,500 for closing costs plus 3% of the purchase, because that'd be only like $5,000. So maybe you bought something under 200. But congrats, man! That's friggin' a smoking deal. Must live in the house for a year. The down payment grant is taxable income, but the closing cost grant is not. Unused closing cost grant money can be used to buy the points to lower the interest rate. It sounds good to me, dude. I mean, I'm not going to knock it because, this is my thing about, see, 165 sales price. That's why it was about 5,000. 3% of this was for your down payment, and then the 7,500 in closing costs, which you couldn't use it all. So you had to use some of that towards buying down the rate. It makes sense to me. I talked to home buyers galore. Millions of them. No, hundreds. Thousands. And one of the biggest barriers to entry is the down payment. And so something like this, the thing that sucks is that this down payment program isn't really a lender thing. It's Bank of America puts a few $1 billion in the coffers and say, here's a grant that we're going to give out. And then when the grant money's gone, it's gone. If lenders came out with some sort of true down payment assistance like this that didn't have any strings attached, like a lot of the state agency, Cal HFA and whatnot, where it's like higher interest rate, higher fees, all the other stuff that comes along with it, then that would help folks buy their first house. Unfortunately, the down payment assistance programs that exist just are payday loans. Not this one. This one's good. This B of A one is good. The thing that sucks about it is it's limited, right? It's limited to one, the market you're in, you got to be able to get an offer accepted with it. And two, it's good. So it's going to run out in 9 months and they're gonna be out of money and then it's game over. But Darren, congrats, man. Really stoked for you sitting that 2.625 30-year fix for as long as possible. All right, Georgina, I already forgot your question. Talking about jumbo. Oh yeah. I mean, if you're in the Bay Area and you're buying $1 million home, $1.5 million, I mean, Bay Area, you might be buying $3 million. If you've got $1 million sitting in Chase might be able to offer you a rate that I can't. And I'm okay with that. Do that. Because really, I've got loan officer buddies at Chase. And for that relationship where they want you to keep that money there, they want you to have the Morgan Stanley investment account, and they want you to have a business checking account, and they want you to continue to have that banking relationship with them, they will write a loan at a loss, and they will take a loss to keep your business. So they want your deep pockets staying with them, Georgina. So the good news is you find a mortgage broker you like and trust, and you say, hey, Matt, they're going to offer me a 2.7 30-year fixed on this jumbo. And I go, yep, do it. Jumbo market, you might not be like, so under the knife to have to close the loan in 22 days. And so it doesn't matter that it takes them 35 days to close it. But just see what they can offer, run it by brokers like me that you like and trust. And then I'll say, yeah, we can go to Flagstar. Yeah, we can go, to Finance America and get you a similar rate, or no, we can't. Like they're just beating anything I can find. Best of luck to you. Are Zillow estimates accurate, or should you get a market analysis from a real estate company? I mean, I guess it looks like it depends on what you're trying to do. If you're just trying to get a rough idea what your home's worth, as much as those values get knocked, I'm interested to see. My buddy Jeb Smith made a video today, and I didn't get a chance to watch it, but it's talking about Zillow estimates and what did he call it? I'm trying to find it now. Basically, are they accurate or something like that? Now, see, when I start looking and I can't find it, I'm going to find it. Our Zillow values garbage. That's the title of a video he put out 3 hours ago. I haven't got to watch this yet, but I love all the stuff that Jeb does, so I'm sure it's an awesome video. If you're not subscribed to Jeb Smith, you got to check him out. Here he is. Our Zillow values garbage. That is likely going to be an entertaining video. He's a real estate agent down in Southern California. He does a great job, and so yeah, I'm gonna check that out either later tonight or tomorrow. That's where I'm gonna send you, Zita. Go check out Jeb Smith, Our Zillow Values Garbage. That's where you can find whether or not they are. I mean, they'll give you a rough estimate, right? But if you're trying to sell your house, or if you need an accurate estimate for another reason, like talk to a realtor, talk to a professional. All right, where did I go? My bank is asking for work from home letter. My work said no. So yeah, if you're getting a loan and your place of employment is 362 miles from your home, and you're saying it's your primary residence, the lender's going to ask you for a letter that says, you can work remote or you can work from home. Sometimes, depending on the lender, we might just require you to supply us with a letter of explanation from you saying, I'm able to work from home in my current position. You're saying my bank. And generally when you say banks are more strict. They just are. They have more strict underwriting guidelines and more overlays than your average direct lender or broker. But yeah, I mean, if they're asking for it and they need it and your work says no, it's a red light. You can't go. If you try to drive through the red light, you're going to get a ticket. And so, yeah, that's a tough one. Moving from New York to Texas. Okay. So if you're going to move to Texas and you're trying to buy a home in Texas, you have to have income to prove that you're going to be able to make the payment. If you work in a dental office in New York, you can't use that income to qualify for a home in Texas that you're going to say is going to be your primary, because you can't be a dental assistant on Zoom. And so if you work for a tech company and you are able to work from anywhere in the world, and then you're going to have to do some sort of work from home letter for that. So now I see the picture a little bit more clear. Yeah, I mean, that's something that most any lender is going to want, right? If you're working in a deli in New York, and then you're telling me that you're trying to buy a primary home in Amarillo, Texas, and that same job is what you're using to qualify, I'm going to say you can't make sandwiches. You're not going to take a flight every day to make sandwiches in the deli. So yeah, I'd figure that out. I mean, if you can truly work from home, then maybe you talk to, oh my gosh, this is the answer to your question, Quicken Loans. I mean, enough said. They don't have the best reputation. That's all I'm going to say. Not a lender I like or trust. That's all I'm going to say. I'm not saying any more about Quicken. I'm not going to tell you how bad they are. I'm just going to say second opinion with anybody but Quicken. You're going to Texas? I got some advice for you. GreatMortgageBroker.com. 6 quick little things. Boom. Connected with one of Matt the Mortgage Guy's preferred broker partners. Guarantee you they're not going to broker your loan to Quicken. That's a 100% guarantee. GreatMortgageBroker.com. Check it out. All right. Enough about that. All right. MSM 41009. Thanks for joining. I would like to use PenFed Credit Union as my lender to purchase a house. I think this is the same. And this is like, again, you heard this advice from somebody else, not me. So I'm just going to back up what they said. Credit unions and banks generally move slower. And in super competitive markets, markets like mine, realtors know that. They communicate that to their sellers. And the sellers just look. I mean, they've got 12 offers and they go, Penn Fed Credit Union, no thanks. B of A, no thanks. Local broker, we'll consider that. Local direct lender, we'll consider that. Another bank, no thanks. Quicken Loans, no effing way. Broker, okay. Broker, okay. Who's this? Better.com, no chance. Another online lender I've never heard of, no chance. Direct lender, okay. Broker, okay. All right, let's pick up the pile that we're actually going to consider. You're in the pile with credit unions and banks. They're just not, I mean, they've got all these offers to choose through. Why are they going to wait 9.5 years? The funniest memes are, Wells Fargo said they're going to close your loan in under 6 months. You don't have to keep asking them every 30 days. Something like that, right? They just take a long time. Sorry. Can you help me? I can. GreatMortgageBroker.com. Last plug, I promise. Woo! Oh, you guys are ganging up on me, trying to get me fired up. You know what this is like? This is like when they try to get Dana White fired up about all these YouTubers that are fighting boxers to keep asking them questions. You guys are asking me about Quicken, fired up. You guys asking me about Costco, fired up. Here's what happens. Costco is the same thing. I mean, and for protein shakes in bulk, love Costco. Paper towels, the apple juice things, my kids call them apple squeezies, all day. Love me some Costco. For mortgages, all it is it's like Lending Tree. You're filling out your information and they're selling that information to different mortgage companies. If a mortgage company doesn't have a good reputation to be able to generate business and generate repeat business because they do good work, a la I'm at the mortgage guy, they're going to pay Costco to show up in their feed $100 per lead. And so when you fill out that Costco lead, everybody who's paying $100 a lead, all these companies who can't generate their own business from doing a good job, are going to blow your phone up. You're going to get 94 of them calling you every day until you finally just have to change your phone number and move to Zimbabwe, because that's what it is. It's a lead aggregator type of deal. Costco's not the mortgage company. And from last I checked, if you go and fill out one of those forms, like some of the mortgage companies they have are like the trash of the trash. Costco Mortgage Refinance. Yeah, who was it? Like, oh, Lord help us. Amerisave Mortgage, Quicken Loans, Better Mortgage. Yeah, I mean, whoever's paying to play. That's all pay to play stuff, which is not the best. New American Funding, I've heard good stuff about them. Avoid Costco. I mean, here's what I would do. If I was a consumer in the market for a refinance, I would probably, if you don't have like a friend or a relative or someone who can offer a referral, maybe you go to Yelp. Maybe, you're in Riverside, California. Best lender, Riverside, California, or something like that. But here's what I want to see when I search a mortgage lender. I want to see a face. I want to see reviews. I want to see a license number, because what happens when you don't see all that stuff, you just see, a name of a company and view rates. They've got no reputation to protect. They can promise you whatever they want to promise you, and they can sell you whatever they want to sell you. If they're working out of a call center, they're getting paid based on how many apps they take or how many, people they push to a loan officer. Sometimes it's not even a loan officer, right? It's somebody who's in like the call center environment, and they ask you some questions. Okay, this person might be a qualified lead. Now I got to send it to someone who's actually licensed, because these people are getting paid minimum wage in the call center. Then they get you to somebody licensed, and I've talked to people who started mortgage companies who used to work in the big call center Quicken places. And these guys have no interest in setting you up in the best mortgage. They have no interest in game planning for wealth creation, for your goals, getting the loan paid off in a certain amount of time. Like, all their goal is to get a deal done and a deal submitted. And so you're just going to get the very worst advising. So find somebody who has a reputation to protect and work with them, because they're going to give you good advice. If they don't, you're going to be like, oh man, like that guy gave me some bad advice just to get a loan done. Bad review. And they're going to be found out real quick. End rent. Yes. Max rent back to the seller 60 days. For sure. I've checked on this a lot because there's been a lot of need for sellers to rent back where they're looking for replacement properties. And so that a lot of people have been taking this max, right? You as a buyer have to occupy within 60 days. That's why the max seller rent back is 60 days. Oh, that's a tough question right here. But it's a good one because a lot of people are asking it. In order to get my offer accepted, what should I waive? I think that, you mentioned closing costs here. So, whatever you can do to enhance the seller's bottom line, a la higher offer, you paying more of the closing costs and whatnot, it's going to make their bottom line higher. Do that. So closing costs, you're going to pay as much of those as possible. I would never waive a home inspection on a house that's more than 10 years old. It's too risky, right? And I even in the most competitive market, Sacramento super competitive, I'm not seeing people waive a home inspection. If a house is built in 1980 and they could have a sewer problem that costs $28,000, that would just be silly, right? So you're not going to waive your home inspection, but I've seen loan contingency waived on buyers who know they can get a loan done, and there's no way that your W-2 income of $140,000 a year, your 800 credit score, and your verified money in the bank. I'll tell you, there's no way this loan doesn't get approved unless you quit your job. So you can waive your loan contingency. You waive your appraisal contingency if you're in a position where you're going to put $100,000 down and you've got $200,000 in the bank, and you say, listen, if it appraises for $40,000 less, I'm not worried about it. I'm going to offer $540,000. There's comps above $500,000. Very worst case scenario, it appraises at $500,000. I'll pay that $40,000 difference and put the $100,000 down. I'm fine with that. If you're fine with that, then waive the appraisal contingency. And that is what it's taking in some of these markets to get an offer accepted. If that sounds crazy to you, if you think I'm out of my mind, if you think the market's out of its mind, then so be it. But that's what's getting stuff accepted. And so that I think would do it, right? Is waiving the loan contingency, the appraisal contingency. Maybe you have a 10-day inspection period, but the sooner you get to, okay, we're in, we've got a $10,000 deposit, and after that 10-day inspection, we have no more contingencies. We're in it to win it. Then that's going to make the seller warm and fuzzy, more likely to accept your offer. Ugh. We closed the B of A, but had a horrible experience. Oh, Georgina. I try not to knock it, but maybe, and here's the thing too, the loan officer could be a great person. I know loan officers that work at B of A, and they've got processing centers where their processing center might be Arizona or might be Texas. So they've got very little control over it as a loan officer, and it's corporate. So it's all just one, it's archaic. Think about some of these big banks and how they operate. It's got to go to processing down in Arizona. That's going to take 7 days for an underwrite. And then it's got to go here. And it's going to take 4 days for this. And then it's got to go here. And of course it's banking hours. People who are in process with me, even though I'm busy with 47 loans in process or whatever the current day's number is, you can still text me at Saturday at 3:30 and get an answer from me. Even if it's just, I'll get back to you tomorrow once I'm in front of a computer or something like that. At least it's an answer, right? Versus big banks, you're just not going to have the same communication. You're not going to have as good of a process, and no knock on them. They do a bunch of stuff. Mortgage is really not their bread and butter. It's not their main concern. You talk to mortgage brokers, you talk to direct lenders where all they do is mortgage. They better be freaking good at it. That's all they do. You got it closed. Wipe the slate clean. Georgina, the only thing you can do now is put it behind you. It's done. No use in being upset about it now. You just learn your lesson. You're going to give me a call next time, and we'll take good care of you. Looking to use my wife's 401k. Yeah, you can definitely do that. And if you're doing it to buy a primary residence, it's considered a hardship withdrawal. It's like one of the excuses you can use to pull money without any tax hit. And so what you want to do is, let's say you got 50,000 in there, you're going to pull 20,000. Maybe get with the 401k company to ask any questions you want to ask as far as how long the process takes, how you go about it, because you're probably not going to be able to pull it until you're in process. And that's where people are like, hey, should I pull it right now? I'm going to buy a house next month. The 401k company is probably going to want a contract, and the contract has the address, the purchase price, the down payment, and all that stuff on it. They want that information from you before you can request the withdrawal. So you can't even request it until you're in contract. But once you're in contract, the lender is going to say, start right away. If we're doing a 25-day close, I want you the day we go into contract on June 8th to request that in case it takes 10 days, because you're not going to want to hold up the transaction waiting for that. Uh-oh. Never waive inspection. Yeah. I mean, learn from this guy. Imagine if LB Alexander would have waived him and he bought his dream home. It's got foundation repairs. Foundation repairs are probably even worse than sewer repairs, 40, 50 grand. And in this case, I'm glad you got the sellers to lower the price for it, because now you can address it, versus, you waive that, you're SOL. Oh man, what a good question. I literally had somebody talking to me about this earlier, because these ADUs, accessory dwelling units, are more and more popular. A lot of people are adding them in California. And I'll be honest, rather than tell you I know everything about this, I'm going to say I haven't done a ton of these deals to tell you what the appraisals are looking like on these things, because somebody might have a $500,000 property. They paid $175 to put an accessory dwelling unit in the back. The appraiser is going to come out and like, how many comps do they really have to say, this 1,700 square foot house plus an 850 square foot accessory dwelling unit is worth 700,000. I mean, they just are not going to have a lot of comps to go off of. And so, I have one currently where a buddy of mine put 2 ADUs in the back, and he's put 2 595 square foot ADUs in the back. We'll see how that appraises. Yeah. I mean, I don't have enough data to go off of to give you a really educated answer. All right, Kevin W. I can't always agree with everybody, and I definitely don't agree with this. Not sure what part of the country you're in, but 90% of the buyers I'm working with who are buying $500,000 and $600,000 homes, if they waited until they had 20% down to buy, they would be, it would be really not good advice to tell them, like, wait until you got 110,000 to put 20% down plus closing costs, especially considering, like, I ran the numbers for somebody today on a loan with 5% down, and like mortgage insurance is so cheap. Oh, my boy, Bill Morgenstein, you beat me to it, man. I didn't get a chance to call and congratulate you for closing, but super pumped for you. Super pumped, because I know that you were the perfect client. Someone who's like, listen, I understand the market's competitive. I'm willing to get after it and go strong. Connect me with an agent who's a pit bull. I got you connected with a great agent who I've known for a long time. She went out there, wrote an aggressive offer, got your offer accepted. My staff is always great with clients like Bill Morgenstein. I'll tell you that. Somebody who's responsive, who knows like, hey, I'm in a mortgage transaction, therefore I'm going to check my emails. I'm going to figure out if anything's needed from me, and I'm going to provide it in a timely fashion. So the pleasure was all ours, Bill. And I appreciate your business, and I appreciate your kind words. You know what I'm going to do? I'm going to screenshot this. I'm going to send it to my team because I'm extremely blessed to have the best team in town. All right. Screenshot, taking a picture for the team. Let them know Bill Morgenstein is closed and happy. The success story right here. So thanks for those kind words, man. I totally appreciate it. Enjoy that nice new place, and hopefully I get a closing package out to you soon. Back when, there was no COVID and people were signing in person at escrow offices, I used to love to go to closings. Then I get to meet people. And that's been the biggest thing I've missed over the last year. Gosh, it's been over a year, right? Is I don't get to go shake hands and meet people in person anymore. But maybe someday I'll make it out, and I'll coordinate coming out and seeing the place and delivering some Matt the Mortgage Guy swag. So thanks for the kind words, man. I appreciate it. I'm enjoying this. I'm enjoying it even more that I've got a great team that continues to just do an awesome job. And then I get great feedback like that. They deserve all the credit. So back to my buddy, Kevin W. Break even point in years for buying a point. Oh, that's a good question. So the thing about this question is it varies. And if you look at a rate sheet, you might on one deal have, let's do this. Oh, shoot. Add to stream. There we go. That's hard to see. But on this scenario, it's just a random scenario where 3.136 is no cost, and then 2.875 is a point. So there's the point cost. Let me see. What do you do? Control plus to zoom in? And so here's the it's not going to be the same on every deal, right? Like this rate sheet is going to change on every like 60 to 75% LTV different, 75 to 80% LTV different. Investment property versus primary different. 1 unit versus 2 unit different. But you can look at it, and we'll look at this one to see what it is. And more often than not, it's just not worth it. 3.13. This is the principal and interest payment, $1,651. Then you pay a point to get down to 2.875, and it's $1,597. $54. So $38.96 in cost divided by $54. 72 months. That's a 6-year break even. From what I'm seeing on a lot of rate sheets for a lot of scenarios, it's 5 to 8 years. This one's 6 years. I wouldn't do that. I mean, it's just like today's dollars are worth more than next year's dollars. They're definitely worth more than 6 years from now's dollars. And so my advice is you probably don't want to pay points. Unless, there's some scenarios where I talk to people, it's like, this is the house I'm going to die in. This is my feet first house, means I'm leaving feet first. And so fixed income, I really want a low payment. It's really important to me. And in that case, maybe you pay a point or something. I've got money now and I want to spend it because I really want my payment to be less, and I'm on a fixed income and I really need this payment under $2,000, whatever the case may be, maybe then. But if you're like most people, you're only going to stay in the same loan for 3 to 5 years. You're only going to stay in the same house for 8 to 10. And so the odds are against you, and inflation is against you. That's my best advice. Yeah, Bay Area 20% down. The Bay Area is a different animal, Kevin, but still, there's good 10% down programs. I just closed something for somebody who put 10% down. He's doing a house hack. I think he paid $1.1 million. It's got an ADU that he's going to live in. He's going to rent the front house out. And so he put 10% down. His mortgage is like $4,400. The front house is going to pay him like $3,000 in rent. So he's in the back for $1,400. He's going to be paying down debt on $1 million asset. And, his interest rate is 3%. I wouldn't necessarily say that's a bad idea that he put 10% down. So I think it's scenario specific, right? It's not really fair to be like, if you're not putting 20% down, move to a different neighborhood. 20% down in the Bay Area is harder than most places, right? If you're in Ohio, you're buying something for $90,000, then maybe you try to get 20% down. If you're in the Bay Area where the entry level is $1 million, it's going to be tough. Miss Diva Teacher, congrats to our boy Bill Morgenstein. Yep, closed on a nice place up here in NorCal. At what FICO score does your mortgage options really open up? I'm 660 now, but could possibly get closer to 720. It's going to get better at 680 and then better at 700 and then better at 720. It's not going to be like leaps and bounds, but I know 680 for sure is going to be a big improvement from that. Let me see. Let's do purchase 95%. And I'll see the hits. And when I talk about the hits, there's like loan level price adjustments where it's like a half of a point for this credit score. It's 3/4 of a point for this credit score. You guys might not have any idea what I'm talking about, but just hang with me for a minute. I'm gonna try 660 versus 680. Because with 5% down, like 660, you're probably better off going FHA. And then once you get to 680, then you can look at FHA versus conventional side by side. But 5% down, when you go conventional, the credit score is going to determine the mortgage insurance amount. If you got a 760 credit score, your mortgage insurance is super cheap. If you got a 660, your mortgage insurance is super expensive. Just for like an idea, I typed in 400,000 with a 660 credit score, and your mortgage insurance is going to be expensive, like $373 a month. Then if we go to 680, I bet you it goes under $300. And this is $400,000 purchase price, $380 loan amount, so it's 5% down. And holy guacamole. I said 373 at 660. You go to 680, it goes to 205. It's almost half. So at 680, the mortgage insurance is cheaper than it would be FHA, because FHA is 0.85 for everybody. It's way higher, 660, 680, it's 0.65. So now we're 205. Now we're cheaper. And then I bet you 700, even cheaper. So 680 might be like the sweet spot. If you can get to 720 in a few months, then go for it. 680 is going to be the biggest jump, I think. Yeah, then you're 161. It was 205 at 680. Then it's 161 at 700. It's kind of a fun exercise. Because then as I answer these questions, this stuff gets stored somewhere in my brain. And then the next person asks the question. I'm like, yeah, for sure on conventional, 680 is the tipping point where things get a lot better. All right. 133 once you get to 720. So it's getting a lot cheaper as it goes up, as you would imagine, right? 680, it's a big jump, 373 to 205. Then I think it was 161 and 133. Yeah. All right, Carlos G. Average rate for a cash out in Texas. Well, as much as I can price my stuff in my pricing engine, it's going to be different in different states. First mortgage. I'll say, so you owe 88 on the first, you owe 58 on the second, 233 value, and you're looking for cash out 26 grand. So what's that going to be? 172. Let's call it 75% loan to value, because it's close enough, even though you got to factor in like some of your closing costs and stuff. Let's say you have a 233 appraisal, 75% loan to value, 800 credit score. My guess, we did something with a higher loan amount earlier, and it was 3.1. I bet you this is similar, but maybe a little bit higher because lower loan amounts, the rates aren't as good because lenders. Oh, it's the same rate as earlier, 3.1. 3.1 for no points, 2.99 for a half a point. And that's perfect credit, 75% cash out refinance. So you got 3.875 on the first, 5.69 on the second. So the blended rate is like in the mid fours, maybe, because the second is lower. So let's call the blended rate 4.5. You're going to go down to 3. You're going to save 1.5% on 150 grand. You're saving $2,200 a year in interest. And if you put that cash out to good use, yeah, it makes sense. Do it. Go to greatmortgagebroker.com. Connect with a great mortgage broker in Texas. Rewind by 12 minutes and watch my breakdown of the point discussion. Usually not. I did one 12 minutes ago or so where we broke down that it was a 72-month break even for paying a point. Most people aren't staying in their loans for 6 years. And so I wouldn't personally pay money today. And let's just call it, you're going to pay $10,000 today. And I'll do a 72-month break even to save $139 a month. Your $10,000 today, to me, is worth more than $139 a month. One, you might not be in that loan in 6 years. Two, in 6 years, you're going to pay $139 for a tank of gas. And so I don't personally think it's worth it on most scenarios. There's a few scenarios where people talk me into they're going to buy points and here's why. And I say, okay, I agree with that. That's cool. But most scenarios, I don't think so. So, yeah. And like I was saying when I did the analysis earlier, it's different on every single scenario. And there's one is going to be a 5-year break even. Another one's going to be an 8-year break even, whether it's investment property, 1 unit, 2 unit, based on your credit score, all that other stuff. Rate sheets just vary a ton. Loan type, product type, all that stuff. And so it's not like a one size fits all. Don't ever buy points, always buy points, anything like that. But in my opinion, from what I've seen, it's not something that I advise. I'm trying to look something up for you guys. Okay. Georgina. Yeah, this is true that like the ability to pay above appraised value is going to be a big factor. And some people choose to pay 5% down, 10% down. I had plenty of people that were buying in the Bay Area, Georgina, that were putting 10% down on purpose because the rest of their cash reserves were going to be used to pay an appraisal gap. And I've had people, San Diego and other expensive markets in California, write an offer purposely knowing that they were going to default to 10% down and use money to bridge an appraisal gap because, like it or not, a lot of these homes that are going to appraise for 1 million are going to sell for 1.1, or they're going to appraise for 1.2, but they're going to sell for 1.275, whatever the case may be. And buyers are fine with it. And so they just, some of the reserves they have, they know they're going to have to use to pay for the appraisal gap. And that's why the 10% down jumbo product I have has been a very popular one. All right. Get your last minute questions in. I've got a client bringing me biryani. Hope I pronounced that right. It's an Indian dish. Client that we closed on is bringing me some Indian food. And so I'm going to cut this thing off here in the next 5 minutes while I prepare for some good carb loading with that client. I appreciate everybody who was here. I'd be remiss if I didn't pump this one more time, just because if you're not in California and you just don't know who to go to get good mortgage advice, I was so many people, Matt, who can you refer me to? I'm trying to find somebody. I'm in Florida. I'm in Texas. I'm in Illinois. I'm in Georgia, whatever the case may be. I finally just created, and I'll show you guys this, greatmortgagebroker.com, where you go here, want to connect with a great local mortgage broker, click here to get started. Boom, you click here. It's got a video over here of some good looking dude saying, hey guys, you're looking for a new mortgage? What state are you looking in? And then you fill this out and you say, I'm looking in Arkansas. All right, cool. How's your credit? It's fair. Okay, cool. Are you looking to get pre-approved? New purchase mortgage, refinance an existing mortgage, or do a cash out refinance? Cash out refinance. What's your timeline? I'm going to buy in the next 3 months. Would you like us to connect with a trusted real estate agent? Nah, I'm good. I've already got one. What's your first name? Matt Test. Okay. Your last name? The mortgage guy. Test. Okay. Phone number. 555-555-5555. Okay. Oh, that phone number isn't valid. I think once you fill this out, I don't want to do this. Oh yeah. And then your email address, and then you're done. Then you submit. I'm not going to submit it because I don't want somebody in Arkansas to think that I'm sending them a bogus lead. That's all you do. You press submit, bam. I've had such good feedback. People are like, man, they reached out to me at 7:30 p.m. Thank you so much. And so if you ever don't get great service, let me know. I'll tell them they're cut off. But that's what you do to get connected to somebody outside of California. So with that, thank you guys for joining. I think we got up to 50 at once. Continue to share this with as many people. Please continue to show up on Mondays. Ask the great questions you're asking, because really the success of this Monday night Q&A is the quality questions. The better the questions, the better the information I can give, and the more people find value in this. And I think that it's public service that's needed. If people search mortgage questions online, what I tell most people that I talk to in my business is that you're going to find bad info or outdated info. Both of them don't serve you. So getting questions answered in real time from a mortgage broker who's working in 2021 knowledge is going to serve the people that are watching this live, watching it on replay, all that good stuff. So is there a consultation fee? Never pay any mortgage broker anything upfront. We get paid from the lenders we send business to. If you're ready to buy, if you're in California, Matt at mattthemortgageguy.com. If you're outside of California, go to, like I said, right here, greatmortgagebroker.com. Start there. No consultation fee. They're going to give you great information. If you end up doing a loan, the lender's going to pay them for sending the loan to the lender they send it to. Brokers are going to send your business to the lender who's going to give you the best deal, because I saw bad information on another channel too. My where my comp is set at every single lender exactly the same by law. I can't get paid different amounts at different lenders, because then obviously I'd be like, oh, I'm going to take you over here where I can get 2 points. I'm not going to take you over here where I get paid 1.5 points. It's going to be the same at every single lender. That's how it works. So I'm taking your loan to where you're going to get the best service, the best rates, the best fees, period, the end. That's it. Matt, the mortgage guy. Thank you very much for joining. I appreciate you. Until next time. All right. Hit me up. Cerritos, California. I got you. Salvatruch. Bye-bye.